Hey guys, how you doing? Time for our second office hour episode. Gonna go over a couple of different things today. Um, got some good stuff on the docket. So stick around and hope to get to your questions at the end. So first off, just a couple of housekeeping items. Each time we have a monthly training, we're actually gonna have it posted on our website so that you can join in on the office hours. We're gonna go over different topics, and then we'll record this and set out content for you guys to be able to reference and use it for answers for new clients or people that are interacting with us and want to know how we handle certain situations or what our opinion is, or just need to learn more about finances. So that'll be posted on the top of our website. Today, we're going to talk about life insurance and life insurance. Life insurance and disability insurance and insurance in general. Um, Insurance is an interesting topic because it's one that no one wants to talk about. Um, it's not the exciting thing. It's not what you go into finances for. It's not what you plan for. It's not what you build, right? Everyone gets excited during the planning process of talking about their goals, their dreams, where they want to be in 5 years or 10 years, or trips they want to take. In fact, recently got photos from a client. I've worked with them for, it's been about 15 years now. Pretty awesome. Um, One of my early clients, and they sent me some photos. Just said, "Hey, I just want to send some photos of everything that we were able to do this last summer, based on your coaching and planning everything." It was a bunch of photos of them in Paris, which was awesome to see, and that's just a highlight for me. But those are things we plan for. Those are things we dream about that we want to get to. The challenge is uh, we can have plans, and then those plans can um, change, right? One of my favorite quotes about planning is everyone has a plan until they get punched in the mouth. Mike Tyson quote. Someone I would not want to be punched in the mouth by. But you can go into anything in life, right? With a plan, with a goal, with an objective in mind, and things change. Um, and so, what happens? How do you plan for? How do you prepare for the unexpected? Those punches in the mouth, right? So there are different types of things that we address as part of a financial plan to make sure that you've got appropriate insurance. So we're not going to talk about car insurance. You're required to be able to drive a car. We're not going to talk about homeowners insurance or liability insurance for your business or umbrella policies in this episode. We're not going to talk about malpractice insurance. We're going to focus just today on two types of insurance. That's life and disability insurance. And the reason that I want to focus on those today is because there are very few types of insurance that can provide the most value because they protect the thing that's most valuable to you and your family. Well, I guess you're probably most valuable to your family, but the things that are most valuable to you, the most important asset, the most valuable asset that you have is you. It's your ability to create wealth. You and your income is the engine. And if you're at our blueprint for financial success, the center of all that is you, the income that you bring in. And so life insurance and disability insurance are the insurances that protect that income for those that you love if something were to happen to you, right? So just a couple of basics, a couple of things that as I was preparing for this, some things that I thought were pretty interesting. The first form of insurance, of life insurance specifically, dates back to Roman times. They actually have some evidences of the Egyptians, the ancient Egyptians, having some kind of life insurance. They didn't call it life insurance, though. There were burial clubs, right? So if something were to happen to you and you passed away, basically there was a club that would pay for your burial and also would enable your family, or would actually the club would provide for those who survived you. right? So the first form of that was back then in the U.S. It's been around since the 1700s, since before our country was a country. There was a form of life insurance. A bunch of Presbyterian ministers in Pennsylvania got together and basically the same thing. Not quite burial club, right, in this instance, but was a death benefit or a benefit for those families who survived the loss of those who took care of them. So life insurance has been around for a long time, and it solves a huge problem, and that is the unexpected passing of an individual, or even the expected passing, right? Life insurance can none of us are going to get out of this world alive. So life insurance will pay when we pass, depending on the type of insurance, right? Um, so that leads to one of the key topics we're going to talk about today is two different types of insurance. There's term insurance, which temporary, right? It's a contract. Think of it like a lease for an office building. 5-year, 10-year term is what the term policy is for. And it'll pay a death benefit. It's a fixed amount death benefit. And the term is the length of time that you have a locked contract and what the cost of that death benefit is. So let's say you're buying $1 million policy. Depending on your age and your health, that $1 million policy could cost you $35 a month, $55 a month, $205 a month, right? As you get older, things get more expensive for a set period of time. And those terms are typically 10-year, 15-year, 20, and 30-year term policies. People have different opinions on, which length of time you should be covered for, but term is temporary. That's the key factor. Term, temporary, locked in, fixed payment for a fixed death benefit for a certain period of time. Okay. There are different aspects of life insurance policies. There's some living benefits and some other things that a policy can have, but most term insurance policies, death benefit, some of them will have, depending on the carrier, a living benefit. If you become terminally or chronically ill, there's a benefit that you can access and basically accelerate the death benefit to take it today. And with term policy, I think those are very important because not all term policies pay out. In fact, a very small percentage do, which is why you can get $1 million of coverage for 35, 45, 55, dollars a month. Because statistically speaking, not many people actually die during that window, right? So there's term policies and then there's permanent policies. A permanent policy is going to pay a death benefit regardless of when you pass. It is permanent in nature. These are the policies that would be like whole life, universal life, or index universal life. There's actually even variable universal life. It's not frequently used, but it still exists. And all these fall under the category of a permanent policy, a policy that's intended to remain in force for a permanent being the rest of your life, right? Regardless of how old you are when you pass, that policy will provide a benefit to your estate, your family, your beneficiaries specifically, right? Whoever you intend those funds to go for. So two different basic types of policies. There's a lot of stuff online about permanent policies, term policies. Do you buy term and invest difference? Do you buy permanent policies and do an infinite banking program or a tax-free retirement program? And the one thing I'm going to basically tell with life insurance is every aspect of any financial tool that we use for clients, or any financial tool that we use for clients have aspects to them, right? Good and bad. It's a tool. One of the things I tell people often is if all you have is the hammer, then you're looking for nails, right? And you'll find any excuse to use that hammer. And so when it comes to insurance, one thing that I would say, or one caveat, is if you're talking to an individual about insurance, make sure that's not the only thing that they do. They can be very, very good at that, but their perspective is going to come from what tools they have in their toolbox. And if all they have is insurance in their toolbox, right, those are the guys that are really going to push the permanent policies. Not saying they're bad. I own a couple, but they serve a purpose. They have aspects to them, and they have attributes to those policies, and those attributes can help you and be a benefit to you. Okay, so term policies, permanent policies. The most important thing, though, between term and permanent, that's not even the questions that I ask when dealing with clients. The question we talk about, number one, is what is the appropriate amount of coverage, right? How much coverage do I need? I get that question all the time. And so one tool that I often use, well, we're going to go through two things. General principle or rule, 10 times your income in 20-year term. Like if you were to look at a graph and say, how much is too little, how much is too much, what type of insurance should I get? And if we were just to say I could pick one, that's probably a 20-year term, 10 times your earnings at a kind of a minimum actually would be just a good rule of thumb. If you don't have 10 times your income in insurance, life insurance specifically, you probably just need to have a discussion about that, right? So that's a rule of thumb. A tool though that I'll send clients to frequently is actually this website right here. It's lifehappens.org. Okay. It's a nonprofit company. I think it probably gets funded by insurance carriers, but they go about it in a really generic, broad-based view of educating regarding insurance. And specifically, they have these calculators here. So if you go to their homepage, click on calculators, they've got this life insurance needs calculator. We'll talk about these other ones just briefly. Disability insurance needs, we'll talk about disability insurance a little bit later in this call. Human life value. Human life value, basically, if you were to take the value of your life from an actuarial perspective, right? An insurance carrier, first of all, is not going to insure you for more than they think your life is worth. Right. So how do you calculate what a life is worth? Well, that's what a human life value calculator would do, right? But it's going to be things like your value to your family as a parent, your value as an employee or a provider, the income that you're going to bring in. And if you ever think you've got too much insurance, go in and do a human life value calculation, because your human life value is a lot greater than you probably think it is. But the one that I usually use with clients is a needs calculator, right? We don't want to necessarily overinsure, definitely don't want to underinsure, but we just want to meet the needs of those that we want to provide for or who rely upon us. So you can just kind of cruise through this calculator real quick. I mean, let's just say annual income, if you're no longer here, say you want to leave your family $10,000 a month of spending money, right? How many years should that be provided? So think through this. Think through the question. Like my wife hasn't worked for money basically since we started having kids. She probably works harder than I do, but she doesn't work for money. And so, if she had to go into the workforce, it's going to take her a long time to get to a livable wage potentially. But we have also built plans for her not working, right? And so, this life, how long should it last? It might be 40 years or 50 years that money needs to last. If you have debt currently, I recommend definitely paying off your home. There's conversations about other, forms of debt. Did they get forgiven? We pass on. Oftentimes, yes, but let's just say that let's not leave your family with a mess. Let's say that you need to pay off a home, right? We're just going to plug a home in there. Do we need to provide childcare, right? In my case, the income enables my wife to still care for our children, so I'm going to put 0 in there. But you may be in a position where you're going to continue working. That's a part of the value that you bring in life. You have a spouse who takes care of that, or in case of my wife passing on, if something were to happen to her, I would probably want some help with that, right? The conversation I've had is like hire my mom away from her. Well, she's retiring, so that's probably not going to work, but hire someone to help, right? With some child care. We're going to put 0 in there. College funding. This is going to be a whole other call, right? On college funding. But you can go in here and actually choose, how old is your child? Is it a public or a private university school? You can actually pick the state that you live in, and it's going to bring in the cost for a public institution in your state. Pretty cool tool to add in there. So I'm gonna, put in there. In fact, what the heck? I'm gonna put my kids' ages in there. Let's see what exactly the damage would be. And I'm a public school guy, right? There's a lot of great public schools in Utah. And I'm actually going to see, I've never actually tried this before. I now have a teenage son who's no longer considered a teenager, but is an adult. So we're gonna plug in my oldest as well, and just see what the cost of education is going to be. Because that's a value for me and my family. That's a legacy, right? The things I like to tell people is that, hey, if I'm around and my kids are deserving of it, we'll help with college. If they're doing things wisely, we'll help where we can as much as we can. But if I'm not, that's the only thing I can really leave them is some kind of a legacy, and providing for that education is statistically going to be huge value. Everyone comes in different on that as far as their experience. How much do you need for an emergency fund, right? 3 to 6 months worth of expenses. So let's just say if we're $10,000 a month is our budgeting, 6 months is 60 grand. How much insurance do you currently have? We're going to put in 0 here because it's just going to give us a baseline. And it's going to spit out how much insurance you would need to take care of your family, or to provide for each of those needs, right? So income replacement, $120,000 a year for 40 years is a long time to spit out that amount of money. Plus we count in inflation, growth of the asset, paying off the debt, college funding. Public school in Utah is still going to be, $75,000, $80,000, $85,000 a piece for each of my kids. Having an emergency fund, burial costs, and that's how the calculator works. So anyways, life insurance, how much do you need? And then we talk about the type, right? And if you don't know what you need, plug in that life insurance needs calculator and you can adjust it, right? You can plug in that and say, oh, that's way too much, and dial it down. I would suggest before you dial it down, use that human life value calculator to really see how that adjusts with the need, right? So how much do I need? The type. That's the second question. And that's really budget driven, goals driven. Do I want it to be permanent? Are there some estate planning? Are there some gifting? Are there some other things? Number one, life insurance is going to be a lot of times provide and replace the income. It's income replacement insurance. At a certain point, your need decreases because instead of just, how much insurance do you currently have, you can actually plug in that how much insurance you have to how much assets you currently have, right? So yeah, I need $4 million to take care of my family. This is how much assets I already have. It's how much insurance I currently have. So here's the gap, right? And as your assets increase, that gap decreases, your need for insurance goes down. So that's the income replacement portion of life insurance. But there's another view of life insurance, which is estate planning, gifting, legacy planning, right? And that's where more permanent insurance can come into play, especially if you've got children with special needs. That need is always going to be there, right? No matter when you're gone. And so there's different things to look at. But number one, what's the right amount? Number two, what's the type of insurance? Worst case scenario, and going along with type is how much can I afford, right? So here's what I'd like to have: $4 million permanent coverage. How much does it cost? Okay, maybe we're in 10-year term realm instead of permanent coverage realm, right? There's a whole range there. So talked enough about that. We may have to dive deeper or address questions when we get into the question and answer session. But I do want to spend some time about disability insurance because that's another insurance that's tied directly to income replacement, right? We talked about life insurance being income replacement for the early years, and then it transitions to legacy. Disability insurance is just that. It's income replacement. If something were to happen to you, you can't go to work. I deal obviously a lot with medical doctors and dentists. And for some of you on this call, your ability to use fine motor skills with a couple of fingers is where all of your income is derived. Yeah. So, that's a huge thing. Being able to replace your income. You've made huge investments in time, in money, in schooling to get to a certain level, and you lose a thumb, you're out, right? I've gotten calls from clients. Hey, I smashed my wrist unloading pallets out of the back of a truck. How much disability insurance do I have? Kind of scares them, shocks them into that. But you should have enough coverage that based on how much assets you have, how old you are, kind of the same calculation comes into play like we talked about life insurance. What's my need? What's my monthly spend for my family? and how much coverage do I need? So a couple principles about disability insurance, right? There's short-term disability, long-term disability. Short-term disability is usually going to be covered in a group benefit. Larger employers, a lot of medical professionals don't have that, right? But short-term disability is out there. It's going to cover for 3 months because long-term disability doesn't kick in until 3 months. A waiting period, basically is what they call it, right? So you have a 60-day elimination period. You have a 30-day, 60, 90-day, 180-day, or 365-day elimination period for disability insurance, long-term disability insurance, right? And so short-term disability insurance is made to cover a gap there, a short window, because a 30-day elimination period for a policy that's going to pay out for 20 or 30 years is really expensive. A 90-day elimination period is much less expensive, right? So we can close that gap with short-term disability, but it's also a reason we talk about emergency savings, because for a lot of medical professionals, you can't get so short-term disability insurance. It's just not available. You're not involved in a large employer, and the cost just is. It's easier for you to save 3 months worth of expenses, have that sitting on the sideline, 6 months worth of expenses, having that sit on the sideline, than to pay the cost for short-term. Just is what it is, right? So long-term disability, though, especially for professionals, you need to look at that. So that leads into a difference between group coverage and individual coverage. Group coverage for disability insurance, for what we term in the industry, for better or worse, we call them rank and file employees, right? Like the majority of employees, a lot of 9 to 5 employees, a lot of non-specialty, not medical doctors, not dentists. Pretty much everybody else can be covered by a group plan, and it's going to be okay, because if you can't do the job you're currently doing, you can't do any job, and that's kind of what a group policy will play for. It doesn't have what they call own occupation definitions, right? Which means if I'm a surgeon, it's going to cover me being able to perform surgery. So I lose this thumb, can't perform surgery anymore. I still have all the knowledge of a medical doctor. I could teach. I could perform, do other types of roles of a doctor, family physician, sports medicine doc, consult, whatever it is. So one of the stories I like to use is there's a surgeon who actually went out on disability claim, and his occupation was that of a surgeon, received claim for that, went out receiving benefit, and because it covered own occupation, he could actually go and get a second occupation, and he became a sports medicine doc for his favorite university, right? With working with the sports teams on a consulting basis, right? No longer performing surgery, but diagnostics, some other things. And so had disability income coming into his household, and then had another very lucrative position that he was able to get. For specialists, that's what you're going to want, is own occupation, and group policies don't actually do very well. I've also heard nightmare stories working with other professionals. I'm actually working from a hotel room today because I'm at a training. And in these trainings, it's great because you get to network with other professionals. But one of them was talking about a surgeon that was a client of his. They had a group benefit through a hospital that he worked at as a surgeon, and had some individual coverage. And he didn't get very much on the individual coverage. The agent couldn't talk him into replacing this really cheap group coverage. He fell down the stairs at the hospital he's working in as a surgeon, traumatic brain injury, cannot perform the roles of a surgeon, still able to do a lot of things, but the steadiness in the hand, the motor skills, not there. And the group policy bought by the hospital that he worked in, that he got hurt in, would not pay claim. Part of the other challenge with group policies over individual policies is the group policy is subject to ERISA rules, right? Which means there are some legal protections involved with ERISA, and you can only sue a group carrier for performance to pay, which that surgeon should do. Worst case scenario, they should do what they should have done in the first place, which is pay the claim, but he's out the cost, the time, the emotional, the headache. And there are carriers on the group side that just have a reputation, or group and coverage in general has a reputation for finding ways not to pay policies, whereas a lot of, at least the carriers that we work with, on the individual basis look for reasons to pay. They're not looking for reasons to not pay. They're just saying, okay, let's get the documentation we need. Yes, we want to pay. I've had some great experiences with individual coverage, making claims that we didn't even send in all the documentation they asked for because they ended up having enough. Hey, send us this, and we didn't send it, and they still just paid, right? Because they had enough justification to pay. So, group versus individual, strength of carrier, that's a whole topic that encompasses both. Work with carriers, guys, that have good reputation, that are easy to work with. Their ratings, financial ratings. Insurance companies do go out of business, just like banks can, and other financial institutions can. They do go out of business. In 1990, the number of insurance carriers was almost 2,200 in the U.S. life insurance carriers. Right now, there's 727 as of 2022. Right, that's a huge shrinking. Most of those did not declare bankruptcy or go out of business. Don't read that wrong. A couple have, right? But most of the times it's just consolidation within the industry. So, quality company, making sure you know what you got, have enough protection in place, have these conversations, right? Ultimately, we just want to have good conversations, make sure that there's a plan in place and a contingency plan for when you get punched in the mouth and get faced with the unexpected. So we're going to time this over to Q&A. Went through a lot of great stuff. Maybe went a little bit longer than I expected to. Apologize about that. But hopefully there's some good information here that we can get out to you. Probably going to have our marketing guy break this one up a little bit, just so that it's in more manageable chunks, and he may have me do some re-recording. Who knows? So thanks for joining. Looking forward to next month's office hours. We're going to stop the recording at this point in time and turn it over to Q&A. Thanks.